Good morning, everyone. Thank you all for joining us today. We'll just wait a couple of minutes more for other people to join because I believe some of those who are trying to join were facing technical issues. So we'll just give it wait for a couple of minutes. I think we're good to go, right? So good morning again, everyone, and thank you all for joining us today. My name is Antoine Khairallah. I'm the director of the commercial division in SEED Insurance. On behalf of everyone in SEEB, I'd like to thank Theo for this opportunity and the trust they have placed in our team in leading today's discussion. The discussion today will be about professional liability insurance for architects and engineers. As in SEEB, we are committed to providing tailor-made plans to cover these professional practices. We have designed this webinar to provide valuable insights into professional liability coverage. So we hope that today's session will offer a meaningful exchange of knowledge and perspectives. So please let it be interactive because the SEED team is here to answer your questions and to make sure that the topic is clear for everyone. There will be a chat box where you can just drop your questions and we'll make sure that every question is answered at the right time. And the webinar will be recorded and will be shared with you all for future reference. The speakers of this webinar will be Mr. Asad Javed, our Chief Technical Officer, Mr. Manish Nair, our Underwriting Director and the Technical Specialist for Professional Indemnity, Mr. Binoy, our Senior Manager for the Claims Department. Before we start, I would like just to give you a brief introduction about SEEB Insurance. SEEB is a national Qatari company that has been operating in Qatar for more than 15 years. We offer tailor-made products and corporate solutions in a full-fledged operation in Qatar. And we are proud to be ranked among the top insurance companies in terms of technical know-how and services in Qatar. SEEB is 51% Qatari owned, including His Excellency Sheikh Jabir bin Yusuf bin Jassim Al Thani, His Excellency Sheikh Abdullah bin Ali Al Jabr Al Thani, for Al Alfiya Holding, and it's also 49% owned by Shadid Capital Holding, which is a main player in the insurance industry in the region and globally, with a presence in more than 35 countries globally. Our financial rating by Standard & Poor's is BBB with a positive outlook, and the GCC rating is AA. So I will leave now the discussion for Mr. Asad Javed to go through the agenda of this webinar. And please feel free to drop your questions in the chat box again so we could make sure that they are all answered.
Thank you very much, Anton. And greetings and welcome to our today's webinar. I am pleased to be with you today. My name is Mohammad Asad Javed, and I am Chief Technical Officer at SEEB Insurance and Reinsurance Company. So before we move forward to our today's topic of professional indemnity insurance engineering, I would like to give a brief introduction again about SEEB Insurance. Just to inform that our strategy is based on the guiding principle of offering quality products and services to our customers. And the customer satisfaction is a priority for us. And we can customize very comprehensive and competitive insurance programs, which suits with our customers' requirement. And SEEB has all the dedicated industry professionals who can provide all the superior solutions to our business insurance needs. So here you can see on the screen, the agenda of today's webinar is to go through various elements, which are, we will define what is the professional indemnity insurance and why do we need PI insurance, what it covers, and the cover is made on claims made, so when does it triggers. And our focus today will be more emphasized on architects and engineers. And we will also define predominant categories who require this professional indemnity insurance. There will be a difference between annual and single project PI cover, and the comparison between CAR, PI, and IDI will also be differentiated in this slide. We will also mention here, how do we calculate the pricing? What are the premium basis? How do we calculate the premiums? And then we will start on our claims perspective, which will be including various case studies we encountered over the time period. And we will define some of the common policy exclusions in detail also. And at the end, there will be question answer session where you can ask more questions if you need. Can we move to the next slide? So here is the first slide we start with, which is professional indemnity definition. The professional indemnity insurance protects you and your business against claims for alleged negligence or breach of duty arising from an act, error, or omission in the performance of professional services. So I will invite here my colleague Manish Nair, who is Director Underwriting, and he will go through the other slides pertaining to the underwriting side. The floor is yours, Manish.
Thank you, Asad. Good morning, everyone. As Asad said, the idea behind professional indemnity is to cover your professional activities. The why you require a professional indemnity cover. There could be multitudes of needs for it, but most importantly, you would need to protect your assets or liability arising out of it and costs for your defenses. What elevates the need for it is your contractual obligations. You have single projects which are coming in on a regular basis. So you would require the coverage of professional indemnity to be provided on contractual basis. There's always a duty to care in place. When you have a duty to care, irrespective whether there is a contract in place or not, you're supposed to care for it. Regulations also require companies to buy professional indemnity cover, for example, the licensing authorities or the professional bodies who license you in terms of your own individual professions. Um, so the idea behind professional indemnity is to protect your activities, whatever activity you do, against a loss which could lead to a cost to you and eventually a defense cost and protecting your assets. Next slide. What does a professional indemnity cover? It basically covers damage awarded. Now, it means that there has to be a legal case against it. It has to be proven in the court of law, and there should be a damage to it. So if there is a damage awarded by the court, it will be covered. The cost of redoing correction of the works is covered. Cost of defense is taken care of. Plaintiff's cost is taken care of. In addition to that, an additional paid cost for fees, any other fees which is applied hereunder. The unlike other lines of business, the professional indemnity is driven on a claims made basis generally in the market. Claims made basis is defined below with the chart. I will explain it further. But the three important factors of professional indemnity are: policy is always written on claims made basis. The policy could have a cover for retroactive period or prior act cover. This is purely relevant to your annual policies. It is not relevant to any project covers. Why? Because project policies are following the project durations and the ERP period following it. So ERP is an element specifically relevant to single projects where the scopes are clearly identified. If you go through the chart below, claims made scenario, which is specifies here in a period of insurance of Jan 23 to December 23, you would note orange dot on the left, which says retroactive date, and you will see an extended reporting period on the right side. The extended reporting period is not relevant to annual policies other than up to a period of 1 year. Beyond 1 year, the period is relevant to project policies. Retroactive date is purely relevant to annual policies. So if you have a company which is established in, like your firm is 1985, 84, you have taken your first policy. Your establishment is much before, but your policy starts in 1984. So you have a retroactive date of 1984 on your policy. The limit of indemnity from 1984 has been varying because your activities and zones and the territories were constantly developing. So it implies that you will be covered for a certain limit based on the period of cover being bought at that time. And there should be an uninterrupted cover. There should not be any break in cover during this policy period, during the annual policy renewals. So if there is a break, it will break the retroactive period. It's not ideal for any company which has running policies, running exposures for prior activities which has been done. So retroactive date hereunder has to be uninterrupted. Say if you have Sorry, I cannot. Okay. Um, so how does retroactive work? If you have a claim which has happened before the Jan 23 policy, if your current policy is Jan 23 to December 23, and a loss has happened prior to that, however, it is reported during this policy period, and having covered retroactive period, you would have this policy claim admissible. If you don't have a retroactive period on the policy for annual covers, this loss which has happened will not be covered. Now, in this case of a project policy, it changes a bit further. If the policy period of a project is Jan 23 to December 23, and following which there is an extended reporting period of 10 years, as I said before, it is relevant to purely single project policies. The loss in this case has to occur within Jan 23 to December 23, and the reporting has to be made well within time of as soon as you know about it. There's a notification condition out there. As soon as you know about it, you notify. However, you are allowed to notify within a maximum span of 10 years. Why claims made basis is very critical is any claim notified after the policy period will not be covered. That's why claims made basis policies are unlike occurrence based policies where notification can come much after the period. So these are three critical points of professional indemnity: duration of and the coverage element. We are focusing today on architects engineering. You have a substantial broadened scope. It has been expanding on a regular basis. There have been designs, there have been supervision, there have been consulting roles being played by designers and architects and engineers. There have been project management, construction supervision, and a lot of other design and build as well. So the demand in the region has been growing for design and build covers, where the contracts are buying the policies, the subcontractors are buying the policies, the main designer or project managers are buying their own protection and covers. So what happens is during the phase of your design construction plan, or while doing this, you shape the structure and you draw the specification, you would have to comply with body building codes, zonal codes, and principles requirement, which is mentioned as per your contract. Duty of care is always built in, which is natural to whether you are a professional or not. However, it elevates the professional responsibilities here under, and hence there could be a likelihood of an error or negligence. It does not mean every negligence is payable. It basically means there has to be a negligence caused by professional activity to trigger a claim under professional indemnity. The usual exposures which we have seen on our 15 years of this organization are claims arising out of negligent design or design errors, incorrect dimensions, breach of contract in respect of what is asked and what is been given, and negligent observation of construction, administration of construction activities, and counter claims. There are many activities you guys do which you are fully aware of, but the ones which we constantly see is either a consulting role, or an architect, or a designer, an interior designer, a project manager, or a construction management as an activity which has been sought as cover in the market. Many of the organizations here under are buying cover only for the purpose of obligation to fulfill their requirement to get the license. However, risk-aware organizations are buying the cover for the sake of safety net. At the same time, they would go for buying single project covers when and wherever is required. So the basic two products offered by PI is annual and single projects. Annual is a limited cover kind of a cover. Why? So because it covers all your activities which you disclose. If you don't disclose, it will not be covered. You disclose all your firm's activities. Based on percentage of activities, the pricing is defined for annual covers. Annual is done for 1 year, and there are requirements in the country for 2 years also with annual review clause. We offer them those covers, and the policy is always written on aggregate basis. Irrespective of how many projects you do, the coverage is restricted to the limit of indemnity offered under annual cover. Say if somebody buys a cover of $1 million or $2 million, all activities falling under that category without having a separate PI project cover, they will have the coverage restricted to 1 or 2 million, irrespective of what cover value they have. Annual cover is very critical to maintain. If there is a break in cover, you would lose the opportunity of a retroactive date. It will become a bit more challenging to buy retroactive date. It's important to continue the cover. And it also pushes to buy project policies because there are many activities a professional service provider does. I will explain that in a bit later. Thanks, Bala. The requirement of PI projects is PI projects comes in because when you have many projects which are small value and there is no principles requirement to have an PI cover, then you don't buy a PI cover for single projects. But major projects require emphasis on PI covers and an ERP. In the annual covers, the ERPs are not proposed as said before. The ERPs are proposed on project covers up to a maximum period of 10 years. So project specific covers are for long-term policy periods like 1, 2, 3, or 5 years, or sometimes in case of 7 years. Coverage and restrictions are limited to specific project activity, and it's a wrap-up cover. It will take care of coverage for the whole project. If the main contractor or main designer is buying the cover and they have subcontracts aligned to them, it the policy will take care of independently. Means there will not be any recovery coming from annual policies. Instead, it will come from the project policy itself. So it will protect the interest of the scope, at the same time protect the annual policies where protect the annual policy where you don't need coverage to the principal. There are three covers where we see professional indemnity coming into picture. These three items are construction all risk, which KEO is not into, as I am aware of. Construction Act, in construction all risk policy, there are certain extensions, designer extensions given with a very limited cover. It's called MRE 115, MRE 200, DE or LEG. MRE stands for Munich Re, which is the largest reinsurance company in the world. DE is a designer engineering group. LEG is an engineering group. So these wordings are standardly used for construction all risk covers with a limited cover. The coverage here under is ceases the moment the construction phase is completed and maintenance period is over, and limits, it's as said already, it's a limited cover and liability need to be proven. In both PI and CAR, the liability need to be proven for admitting the claim. So PI, but is specific for design and supervision activities. As we said, there are many activities you guys do. So there could be, sorry. So there are many activities as a client you would do. So professional activities are covered under PI specifically. The ERP is allowed under PI. As said, for single project, if you buy a cover up to 10 years, it can be offered. So coverage period is construction period, maintenance period with ERP. The limit of indemnity is much higher generally. It can vary from project to project. There are projects which we have seen where requirement is up to say 10 years and 15 years. Project limit of indemnity up to $50 million has been sought, whereas there are periods up to 7 years plus maintenance period and ERP of 10 years. Inherent defects is a completely different cover. It's actually bought by the owner or the developer of the property or the main contractor as imposed by the owner or developer of the property. The coverage herein starts off from the handover of the project itself. It's a decennial cover, so it's a fixed period of 10 years. And the coverage includes a TCV value, including design and control fees. Because TIS is a point under inherent defects, the policy attachment is subject to the satisfactory report from TIS, and after that policy gets attached, there are no liabilities to be paid. Inherent defect is usually, as I said, is bought by either the contractor or the developer. It doesn't fit in with the scope of pure professional indemnity. However, covers for design, material, and construction defects. Now we come to the pricing of the PI policy. Because it's a professional activity cover, the requirement is that we need to know the activity in detail. We will go through the experience of the client, basically getting the brochure in the activities, major projects you have handled. If it's an annual cover, the professional fees will be advised as you always do, and the territory and locations where you operate on, and the limit of indemnity you desire. The limit of indemnity could vary from one organization to another based on new or an old organization and based on your needs of the hour. If a client buys, so this is the basis of pricing with the claim history. We revise the basic pricing. Once the basic pricing is done, there is a loading factor or a discounting factor offered based on reinstatement. Reinstatement is a loading factor. If you have a claim limit of $1 million and an aggregate limit of $2 million, it basically means there is one more reinstatement. So there is an additional premium on top of the normal premium, which is charged for the reinstatement. For retroactive period, depending how backward you're going, the pricing would impact. An extended reporting period is specifically, as I said, for single project covers and up to maximum of 10 years. Add-on covers can also derive the cost. There are many add-on covers which does not derive any cost. So this is the basis of pricing, and from underwriting perspective, it's done. I'll hand over to Asad.
Thank you very much, Manish, for giving this useful information. Now we move to the second part of our webinar, which is the claims perspective, including case studies pertaining to professional indemnity. So can we move to the next slide? Here we will see standard PI claims procedure, uh, which makes it important to have an immediate claim notification, which should not be later than the policy criteria, because each policy wording has its claims notification criteria, which should be met if there is any claims encountered. And the client should convey all known facts to the insurer so that the proper measures can be taken well in time. And there must be continuous cooperation and coordination with the insurer's nominated representative so that to know all the facts and figures and to assess the claim properly. And there must be timely adherence to all required information so that to conclude the claim without going it to be delayed. So I will hand over rest of the slides to my colleague Binoy, who will go through the claim studies. Binoy, the floor is yours.
Sorry. Uh, Thank you, Asad. Good morning, everyone. Now, when we get into a claim, the first important document that we review is the proposal form. Now, the accuracy of information that is captured in the proposal form is extremely important because the proposal form will be compared with the policy, and based on the allegation that is being shared with us by the insured, we see whether the scope of allegation is within the coverage opted by the insured under the proposal form. So the information that is captured in the proposal form based on which the policy is issued is extremely important. Now, the second important thing from a claims perspective that we prefer to highlight is that the claim should be notified immediately. So immediately in the sense when a principal notifies an issue, to you, we expect that if this needs to be taken up under the professional indemnity from your perspective, it needs to be immediately highlighted to us. Not that you need to get involved with the principal and finally when you feel that things cannot be resolved at your end, at that time it should not be notified, but rather it should be notified at the initial stage when you are aware about an issue that is being flagged to you. Similarly, what we request our insured to adhere is that do not admit or promise or offer or settle or commit or even share any apology to the third party who has lost a claim against you. Now, most important thing is that once an issue is escalated to the insured by the principal or any other third party, even the communication that is being exchanged over phone is extremely important to be checked, because this the telephonic communications will be even recorded, which might stand against insured. So it's not necessary that it should be a written commitment that is given. Even the communication that is shared over phone also has to be scrutinized so that no promise is given over the phone without the written consent of the insurance company. Next slide. Now, here we will look at some of the criteria that makes a claim admissible under the professional indemnity. Now, first and foremost, there should be a legal liability that should be admitted, whereby it should arise as a result of breach of professional duty of the policyholder. It should be triggered through a negligent act, error, or omission of insured. It should be linked within the policy period, and the claim should actually substantiate the claimant's cost and expenses. And whatsoever is the extent of the claim, from a policy perspective, it will be limited to the based on the limit of indemnity that is opted by insured under the policy. Next slide. Now, after we looked at the basic criteria, now we are going to look at few slides on the real claim scenarios that we have dealt under the professional indemnity. Now, coming to the first claim study, here it is basically a claim where the insured is acting as a design and consultant on a project of oil pipeline. Now, the principal claimed against failure of valves forming part of the oil pipeline. Now, based on the investigation that has been carried out, we note that the failure is as a result of incorrect measurements of valves by the design specialist of the insured. Now, this has resulted in replacement of 25 valves, and the policy triggered under the PI, wherein a claim was settled for a total of $2 million, comprising the reordering and transportation cost, direct and indirect manpower cost, specialized testing equipments rental cost, and other add-on costs. Next slide. Now, in this specific case, we are talking about a survey of a high-rise building construction works. Now, the cause of failure was that the insured wrongly marked the channels, which is highlighted on a pictorial diagram, whereby they ignored the upstand on the top floor, as a result of which the principal claimed for redoing the work, and the claim triggered under the PI policy, which comprises of the following cost, which is the cost of removal and reinstallation, direct and indirect manpower cost, and other add-on cost. Next slide. Now, on this specific case study, insured is basically acting as an engineering consultant, comprising the scope such as project management, construction management, design and supervision services. Now, the issue is related to alleged failure from the approved design. Now, as a result of this, the principal claimed compensation for redoing the work. The claim got triggered under the PI policy, whereby the claim comprised of negligent performance of services, design coordination failures, direct and indirect manpower cost, and other add-on costs. So these are the basic 3 case studies on the real claim scenario that we have dealt under the PI policy. Next slide. Now, although you all will be aware about the exclusions forming part of the PI policy, I would like to specifically mention few pertinent exclusions that we normally come across where the claim does not get triggered under the policy. The first exclusion is that pure financial loss of insured where no claim is reported by the third party will not be covered under the PI policy. The claim pertaining to a contractor's all risk or an EAR erection all risk policy will not be triggered under the PI policy. Similarly, the bodily injury of insured employees will not be triggered under the PI policy. The claim lodged against the insured by sister concern or parent company will not be covered under the PI policy. Financial loss on account of exceeding the cost estimates and timelines lodged by the insured will not be covered under the PI policy. The damage arising from insured's engagement beyond the scope of insured's policy will not be covered under the PI policy. Cost of revising or redesigning the drawings, plans, specifications of insured by insured will not be covered within the ambit of the PI policy. So these claims slash concludes the claims part of presentation. Now we can go into any specific queries that the insured have or on any of these slides that we discussed.
Well, we have started receiving few questions that Asad was trying to reply in writing on them. So, is there anything that you would like us to elaborate more? Any specific topic, any specific concern?
there is a specific query with respect to the retroactive date. It says, in the unlikely scenario of having to take a project-specific PI policy in the middle of a project, will a retroactive cover from the beginning of the project will be available, subject to no known claims confirmation. Manish, would you like to?
I will pick it up. Thank you, Hashim, for the question. Retroactive date, as we discussed, the policy ideally should not have a return date on a single project. Single project should start from the inception of the policy itself. In case the client misses to actually buy a policy originally and buys a policy much later, subject to NCD, the policy can be picked up and we can provide you with the we or other insurance company can definitely provide you with the cover in respect of project specific cover. And if the declaration is clear, it might become a slightly more expensive because there is a period which is unknown factor for us at that point of time.
Thank you, Manish. Another question, does project-specific PI policy automatically comes with a primary clause?
Primary clause can be added on any policy which comes in Forte. If a policy specific project policy has been issued, it automatically is primary. There is no need for actually specifically stating primary clause under a single project policy. They have the requirement of primary coverage clause is only when there are multiple covers in place.
Okay. A third question, is IGI cover available for consultants' liability? For example, if the Destiny liability provision in Qatar or UAE civil codes places joint liability on the consultant as well.
The senior liability for pure consultant is not available. It's basically a construction-based approach. The owner or developer or the contractor in that the main contractor here under generally buys the coverage. So specifically only for consultant, it is not applicable. It is not. It is very difficult to provide. We can always explore that, but this is the first time we hear of such a request. Generally, it's always bought by the owner of the property or the main contractor who is told by the owner to buy the cover so that the cover can be maintained.
Okay. There is a question regarding the fitness for purpose non-coverage.
Sorry?
Just
These extensions and add-ons can be considered on case-to-case basis. I replied back to this.
okay. So some clients in the regions stipulate unlimited aggregate or unlimited reinstatements for PI cover. Is this available in the market? Is it something easy to find?
The product itself is a claims-made policy. So claims-made policy, very rare circumstances we have seen unlimited aggregate in covers. However, haven't seen for last 15 years a cover being offered. There were cases brought into us for unlimited in aggregate covers, but it was not provided. But sometimes the client tunes the wording in a very different manner where they state anyone claim 1 million and unlimited number of occurrences, however, subject to an aggregate limit of 15 million. This particular thing came from Kaharama around 15 years back, and we responded saying unlimited covers are not provided. Unlimited reinstatement obviously cannot be priced. You are referring to as something to be priced. If you look at a general liability policy, we can give on any one occurrence and unlimited in aggregate because general liability is very specific. Whereas on the professional indemnity, we are not aware, we won't need to cap it. So that's why it's restricted cover and usually offered under aggregate with a limited reinstatement. Maximum reinstatement here under is not more than 5 times.
Okay, I hope this is clear. If a contract provides for the insurance policy affected under the contract indemnity, the client has thought they are the insured. Does it mean the client will be entitled for the same rights of the insured, and accordingly, it will require to add the client as an additional or co-insured to the policy?
Professional indemnity policy is a unique cover. Unlike any property insurance or a CER policy, where actually it states that X insurance, X client, X principal, Y mortgagee for their respective rights and interest. That's a different cover where there are actually direct rights for material damage cover. Professional indemnity is a liability cover. It's based on your specific activities. When it is based on your activities, you are the prime insured out there. Any other party insured under the professional indemnity policy is an additional insured. There could be a case of claim being brought against the other party, but the policy can pick it up subject to they are well within your scope of cover, not independent of it.
Okay. There is a question regarding the global PI policy. So if it would cover any negligence by the subconsultant or by the surveyor. So,
If the policy extends to cover the subconsultants or the surveyor's negligence, then it can be covered. But usually, it's the main impacts coming from the insured's activities. So subcontractors needs to be defined from the start of the policy, and those should be very clearly mentioned under the policy. Otherwise, it will not be covered. But these things are can be considered and can be extended.
okay. I'm just trying to make sure that we've answered all the questions that have been asked in the chat. Uh, any other clarification you would like us to discuss further? Any doubts?
One important factor we would like to highlight from our side, which must be in the minds of all professionals here, whenever an professional indemnity insurance cover is sought, it's very important to clarify or define the clear activities of the project so that there must be no ambiguity in case of a claims. So whatever the activities are defined, that should be very clear and as per the either project specific or work specific or if being a professional role related. So those must be clearly defined so that there must be no disagreement at the time of a claim. So this is very important in case of buying a professional indemnity insurance.
Okay, Asad, that is a question related to the extension of fitness for purpose. We sometimes see in our contracts that an obligation on KO that the design is fit for purpose. Is there a way to extend the PI coverage to cover claims for unfit for purpose design? So is this extension available and could it be added to the policy?
The coverage for fitness or purpose can be extended, but unfitness for purpose not. There's
In fact,
another
there is
question.
yeah, there is a query. Yeah, I'll read it out. Could you please provide clarity on how liability needs to be proven for it to be effective? Does it mandatorily require a court order? A little more clarity on the claims process would be helpful. Now, here, normally when a claim gets intimated, there are multiple scenarios. Normally, in scenario one, where the insured is intimating the claim on time, where at the time when the principal has notified certain issues, if the insured is intimating the claim to us immediately, we normally engage an internal or I mean in-house or an external surveyor or an investigator who work closely with the insured to gain more facts of the allegations, and they will be providing a report to us from which we will be able to ascertain whether if this matter is escalated legally, whether the insured will be held as legally accountable to cover the loss that has been claimed against the insured. Now, two ways of looking at it. Now, during the course of the investigation or during the course of the progress of this matter, if the principal already initiate a legal claim against insured, then the matter will, will progress through court. But we as insurers, if a legal liability is bound to be proven based on our investigation, then we look at concluding it as an out of court settlement with insured as well as the against, I mean, with the claimant. Rather, we prefer not to escalate the matter legally, which will consume time and expense for all the parties. So it all purely depends upon the specific case, whether the matter is already escalated legally or not. That once a liability is likely to be proven against insured under the professional indemnity, the matter will be dealt accordingly.
Thank you, Binoy. So there is a further clarification requested related to a contract clause. I'm just trying to read the clause itself. For the insurance policy affected under the contract, indemnify the client as thought they are the insured. So would the client in this case be should we should KO be adding him as an additional insured or a co-insured? Manish, you have answered this question, but probably it wasn't very clear to the client. So if you can take this up.
Okay, professional indemnity policy is covered for specific activity of the insured, not the additional insured. There are many policies, many of the policies require additional insured to be named or be part of the schedule itself. And generally, when we write on a CER basis, we would say state and insured name XYZ Limited Company and or the principal and or the sub-consultant and or any other party they herewith who is actually responsible for it and for their respective rights and interest. However, on a PI basis, the rights of interest, the policy could trigger only for the activity of the prime insured. PI is unlike any other policy. If KIO is buying a policy for their name and the activity done by some other party is under their supervision, there can be a trigger of a claim under the policy. However, if the activity is not outsourced and they are just named as additional insured, the activity will not be covered in case of some other act done by the additional insured, which is not relevant to the policy itself. The policy will not pick up liability for additional insured if not covered by the original policyholder.
And also to the question raised now, if the global policy get reduced over the years, and if there are no claims are raised against the insured, so alternatively, will that situation allow the insurance company to increase the coverage limit without increasing the premium? As was shown in the presentation, a sheet showing the components or factors for calculating the premium. So if the activities of the insured remain same and the limit of liabilities remain same, or the turnover of the insured remains same, or maybe a little bit more or higher, for example, then there are chances if there are no claims, maybe the client may get some reduction unless there are losses again being faced by the insurers in the market, which also impact as a book of business for us. But for that client particularly, it should not impact if the experience is good. But if their activities are widening, if the geographical limits are widening, as well as the limit of indemnities are widening and their turnover is widening, then it can impact the premium irrespective of there is a claim or not.
Thank you, Asad.
So if there are any other questions, we are here to serve, or you can also approach us anytime you want. Due to the limited time, because we heard also you guys have to some of you have to go out. So I mean, we are here to answer back to your further questions, or if you want to come back later for any clarity, we are here to serve you.
Asad, there is one more question. What factors influence the cost of the premium for PI insurance?
Okay, so it was mentioned in the slide the activities of the insured, the experience of the client for ascertaining those activities, how experienced is the architect or engineer or consultant, as well as what is the territory or location, and most importantly, the limit of liabilities. What is the limit of indemnity required as a single claim as well as in aggregate? And some of the colleagues were mentioning about unlimited cover, which is really very hard. So all these impacts the premium as well as the claim history of the insured. And number of reinstatements are very important also. If there are losses happens and the reinstatements are required, for example, to save the cover, so it also impacts the premium. And retroactive period, how far they want, and particularly if the limits were changed during the retroactive period, those also impacts the premiums. And also the extended reporting period, because for single project basis, the ERP can go from 1 year to 10 years time period. So all this impacts the premiums. So these are the most important thing. And also if there are any additions, means extensions or add-ons in the covers, those also impact the premiums.
Thank you, Asad. Can you please also elaborate about the waiver of subrogation and can you explain it better?
if the policy have multiple insureds, there is an additional insured there, and generally this is a requirement of contracts where they seek for waiver of subrogation in favor of the principal or other insured parties. Um, Again, we go back to the factor of policy cover under PI. PI is covering for a specific professional activity of the insured here under if it is Q, and the coverage here under is only for their activity. The waiver basically means when you sign off of a claim, there is a subrogation right, which is waived from the client side when the collection of claim happens, and they allow us to go recover from other parties. When the policy has a waiver of subrogation cover, the right of recovery of the insurer is no more there. So we don't go and recover from the other insured parties or who is named under as a waiver of subrogation. Is it possible to get a ERP of 5 or 10 years on a global corporate policy? As we spoke earlier, there are two aspects to it. Annual policies are subject to annual renewable, and hence the limitation of ERP is restricted to 6 months to a maximum duration of 1 year, not beyond that. If an annual policy is in place, it has to continue cover without any break in cover. ERP is not available for annual policies. And I don't foresee that in any near future it will be available. Why ERP is often under a specific contract is because specific contract is very clearly defined, identified, and known exposure. When you do an ERP under an annual policy, it's wide scope. You basically pick up every possible risk under the policy, which will go as an ERP exposure. So the underwriters are not very keen on writing ERP exposure on an annual basis. Yes, international coverages are provided. There's a question, can we get more an insurance policy with international coverages? Um, International coverage means worldwide excluding USA, Canada, we can offer, provided you have an activity out there. If there are no activities outside the parameters of your territory, then you don't need to cover that. But if you have a requirement of that, like Kio has many offices across the globe, so obviously your policy, annual policy will pick those coverages. And wherever, if a single project is there and you have an activity in a particular territory, it will be covered for that territory.
Also, just to clarify, I mean, if you are buying a global cover or a regional cover or a master policy based on architect and engineers, which covers annual policy, then definitely it will not cover the ERP. But if you are talking about the blanket cover for different projects, which comes with a different lengths, means starting from 1 year to 5 years, 3 years time period, and then if you have the ERP under that, which also varies from 1 year to 10 years, so that this is possible. But if you are particularly talking about ERP for the annual renewable policy, that may not be possible. So it depends on the activities you carry out. If your activities are to provide the services to the specific projects, and you have a blanket cover for that, which cover different specific projects, for example, during that time period, irrespective of its length, or maybe with an agreed parameters of the length of the agreements, then maybe ERP can be extended up to 10 years.
Thank you, Asad. Well, I hope that we're able to answer all the questions that have been asked. But in all cases, if there is any further clarification that is needed, we are always ready. We will share with you the presentation and with the recording of the session with our contact details. So anything you would like to better understand, just you can reach out to us at any time. So I would like to thank again KO team who have supported in organizing this webinar. And hopefully it was a fruitful webinar for everyone, and the topic is clearer now for all of you. Thank you so much.
Thank you.
Okay, thank you very much.